Well, hey everyone. Welcome to another week of Looms free training videos. My name is Warren Howe. Hope you're having a great day out there. By the way, recently our company SoFi, right, presented huge, massive updates to their earnings, right? So hopefully you've been building your thesis on them. If you want to talk more about SoFi, drop me a DM and we can talk about it. So today we're going to be discussing about long-term strategies yet again. If you have been tuning in to the previous videos, recommend you to look at that because we'll be talking about portfolio management in a way. How do we look at our portfolios, your top 5 high conviction stocks and whatnot. Yep. So if you have been following the channel, you've been following me, you've been following obviously the group. You will know that this asset class, which is stocks, is one of the highest conviction asset classes out there for us, right? So we are very favorable that this asset class can grow and multiply our net worth in the future. I hope, right? So again, if you're serious in investing, you want to up your level, level the playing field in investing, improve your strategies, how you view, do consider our coaching sessions. Yep. Now, the question is, how long will you keep growing and investing in this asset class? See, that's the huge question. Because a lot of people talk about, long-term strategy. They talk about, I'm going to buy and hold forever, right? I'm going to buy and hold for 5 years. Stock price goes down 30%, things get fucked up. So my point is, when it goes down 30%, what do? What should we do? What are you still having the same conviction level in the stock? Now, there's a reminder that I want to put it out there that volatile stock movements, whether it's up, whether it's down, I know people get happy when they're up. I think people should get happier when it goes down. Because when you identify, and Tesla is a perfect example, SoFi is a perfect example, Airbnb, whatever high conviction stocks that you have is a perfect example. Because regardless of the stock price movements, nothing in terms of the fundamentals have changed. Unless the fundamental structure has changed, the earnings guidance is not as good as anymore, you have no faith in this company, projections are going to be shit, then obviously you will change and, obviously sell on a position and just park it at it. The thesis went wrong, right? But my question is, if you identify the perfect asset class, right? Highly liquid, right? Require low capital. You can grow your net worth, which is stocks, basically. How long are you going to keep investing in this asset class? If you've been building, out of a scale of 1 to 5, 5 being the most, if you have that 5, then will you continue to be putting in your money that you have saved, that you've earned, right? And growing a net worth? Because monthly contribution into a stock portfolio is key so that we can compound our wealth, provided that you are long-term investors, right? So how long will you keep growing and investing in this asset class? In my opinion, forever, right? So for life, really? Is it that simple? So this is where mindset comes in. Everything that we are talking about is long-term strategy, mindset. Will we really do it? It's easier said than done, right? So this will depend on, obviously, the type of stock, the fundamental foundation that you have on the stock, the margin of safety that you have for the stock, and what are the projections at the end of the day to determine stable growth, right? When will they reach to a stage that, okay, that's all, they'll stop growing, terminal value, then you will stop investing in them and have a sell plan. Yep. So sometimes, of course, it's easier said than done. People can hold a company having this mindset for 6 months, but sell off after 100% return. Now, if a stock does go 2x, so 100% return, right? People sell off because they don't have a good sell plan. Especially for those stocks, right? Like Upstart, growing 150% in 2 months, and people will be like, okay, you know what, I'm selling. Now, obviously, the stock price doesn't go up in one wave, right? They'll correct, and they had a correction. People most probably sell off without having a bigger plan for the future. So should we sell on a 2x stock and sacrifice on 10x, or should we hold and the game plan is to build more positions in the stock so that we can own more shares and grow our net worth from there? right? You tell me. So that's the buy plan. Now, the other thing is, a lot of people, I want to talk about, mindset. A lot of people have this thinking that, hey, when the stock price goes up, I will sell and I will buy back at a lower price. So let me know what you guys think about that. Does it work? If you have been building 50 shares on this particular stock, Tesla, for example, and you've been holding on for years, right? 2 years, and they've been reaching 1,002. No, sorry. They've been reaching 900, okay? And that time it's high, right? It goes down, it corrects. You sell them all, it corrects down, okay? You thought that it will correct more, you didn't buy back. Then after that, it goes up again. You're wishing you bought it back. It goes up all the way to 1,003, and you're still wishing you bought it back. So my question is, how the fuck do we know that the stock price will go down the way we want to? The key thing is, we never want to time the market. We want more time in the market. Yep. Because more timing in the market, identifying long-term strategies, identifying your good funder stock, piling on more positions as we go. That's the game plan, so that we can compound our wealth, right? Compound our net worth from there. Compound the gains that we can actually get returns from the stock from there. So that's the key. So I hope you guys got some value out of this today. Maybe you can reposition our long-term strategy thinking, right? Again, if you're interested in leveling up your investing game, so do reach out to us. Thank you.